If you've been selling your creations or freelancing and providing services, and you're not sure whether you need to claim that as a hobby or as an actual business, you're not alone. This is a question that I often hear from small business owners, people who make and create and sell their creations or provide freelance services for businesses or other consumers. So it's really important that we understand the difference between hobbies and businesses as far as taxes go and the implications of such. Now, I live in the United States. I almost exclusively work with clients who are in the United States. So what I will be sharing has to do with US tax law. And I'm not an expert on taxes by far. I am a paid preparer, which means that I have a PTIN, a preparer tax ID number, which allows me to prepare returns for individuals and businesses in the United States. But I don't do tax preparation for everybody. I strictly only do it for my clients who have payroll right now. So those are my qualifications. I just wanted to mention that in case you're like, who's this random lady talking about taxes? So I did do taxes for several years. I assisted with preparing individual and business returns. So I do have some experience to apply here. But a lot of people come to me and say, well, what happens when I don't make a profit for a couple of years? Is the IRS going to come back and say that my business is actually a hobby? So that's what today's video is going to be about, and it is sponsored by the Bookkeeping Foundation Kit. The Bookkeeping Foundation Kit is my quick digital course that I created, I wrote, I filmed, I edited, I produced it, and I sell this course to folks who are using QuickBooks Online who are not accountants, who are not bookkeepers, and probably have no specialized training or instruction on how to do bookkeeping. And these folks are self-employed, they're freelancers, some of them are even artists who don't consider themselves good with money. And I help them through the kit establish the basics and the procedures that they need to be doing to keep their records together and accurate. And I also help them with doing that consistently, because that's a big part of that work. So today we're going to talk about the implications of having a hobby versus having a business as far as it goes with you claiming that on your taxes and claiming any deductions or expenses related to that activity on your tax return. Now, there are some key differences between what a hobby is and what a business is, or what being self-employed means as far as the taxes go. Now, both of these cases, someone who is doing a hobby and someone who runs a business and is selling or providing services that other people pay for, both of those activities generate income. They generate revenue from the sale of goods or the provision of services, and that is pretty much where the similarities end. Now, you can do something for a hobby while somebody else might be doing the same thing for revenue that allows them to live their life. It's not about what you're doing, it's about a lot of other factors and most essentially why you're doing it. But we're going to get into that in a minute and talk about the 9 key factors that the IRS looks at when they're determining whether you need to claim something as a hobby or as a business expense. The main difference, though, is that hobbies are not allowed to take a loss. So if you were going to claim income on your tax return from your hobby, meaning that you do something that does generate revenue, it does produce income for you, and so you want to claim the expenses related to that hobby so that you can reduce the amount of income that you have to claim, the expenses are limited to the total amount of revenue that you make. So we're going to use a pretty easy example to illustrate the difference between how hobbies are limited in what they can claim for deductions versus businesses and what businesses are allowed to claim as deductions. So we're going to start with an easy example and say that both businesses and hobbies, we're going to look at one of each as an example. Both the hobby and the business are going to have $1,000 in revenue in the year for our example. And each of those, the hobby and the business, are going to have $1,500 of deductible expenses to claim. Now, we know that when it comes to filing our taxes for deductions and tax deductions and business expenses, they have to be both ordinary and necessary to our business. We're just going to say that both the hobby and the business in this example have $1,000 in revenue and $1,500 of expenses. So the hobby does not get to claim all of their expenses. Why? Because hobbies are limited to the deductions they can take, at most being equal to the revenue that was generated from the hobby. So if the hobby made $1,000 in sales or service revenue, and then it had $1,500 worth of expenses, the hobby claims zero income on the tax return. That is what you claim for your hobby. You get to claim your hobby expenses, but only up to the amount that you made in revenue. So if you have more expenses than revenue for your hobby, you just get to zero out that income and not claim any income. You do not get to take a loss, which is what the business gets to do. So a small business with $1,000 in revenue that has $1,500 worth of expenses gets to claim that $1,500 worth of expenses. They get to take a $500 loss. And the loss from a business, if you are self-employed and you are a sole proprietor, reduces your individual income. So in this example, that person who owned the small business with a $500 loss would reduce their total income on their tax return by $500. And that is the most generic and simple way that I can explain how things are taxed. Obviously, there's a lot more that goes into tax returns than just that. But using that example to illustrate, with everything being the same, the hobby does not get to claim a loss. The hobby can only claim $1,000 worth of expenses because it had only $1,000 of revenue for the year. The business gets to claim the $1,500 of expenses and deduct that because it is being taxed as a business. That is a sole proprietor who is claiming profit or a loss from their business activity for the year. So that is the major difference between how hobbies and small businesses are taxed. So if you're a sole proprietor and you file that Schedule C on your tax return every year, you might want to consider whether what you do is a hobby or if it's actually a small business. And the burden is on the taxpayer to have the proof ready in case the IRS ever came back and said, prove that you're a business and that this isn't just a hobby. It's incumbent on you. The burden is on you to show why you're a business and not just operating a hobby. Now, there's a lot of advice online, or tips, or people talking about the difference between hobbies and businesses, where they explain that you need to make a profit for 3 out of every 5 years that you're in business, or 3 out of the first 5 years that you're in business. I know that's exactly not correct because we're going to go over what the 9 factors are that the IRS would use to determine whether something is a business or a hobby. And a lot of people throw out the 3 and 5 numbers because it does matter how often your business makes a profit. If you are always claiming a loss, that could count against you. But as we'll see in a minute, that is not the only thing that matters. And that's not the only thing that they look at when they're figuring out whether something is a hobby or is actually a small business. So the 3 out of the 5 years thing, it's a good thing to look at your financial statements, your profit and loss, on a regular basis. Way more often than once a year, by the way. Look at your P&L more than once a year. It's a good thing to look at those reports for yourself on an ongoing basis to see how your business is doing, to see how things are changing. And it could be the case that if you are claiming a loss multiple years in a row as a sole proprietor, that they might come and say, hey, you need to prove to us that you're not actually just operating a hobby here. So let's go over the 9 factors that the IRS uses to determine whether an activity should be claimed as hobby or as business activity. The first thing is whether or not you as the taxpayer carry out your business activity in a business-like manner. And this involves maintaining complete and accurate records, which is the bookkeeping. You keep your receipts, you send invoices, you reconcile your bank accounts and your bank statements. And all of this is what I teach you inside the Bookkeeping Foundation Kit. And I don't think that it's the case that if you are claiming something as a hobby that you shouldn't do bookkeeping. I still think that you should do bookkeeping. But if you are running a business and you're not doing the bookkeeping on a regular basis, you're not keeping those accurate and complete records of your business activity, of your revenue and expenses, that could count as a factor against you because you're not doing that. And they could say, this is why we think you are just doing a hobby, because you're not doing the bookkeeping as a business owner would keep the books and keep the records for their business activity. Another factor is whether or not you put in the time and effort to the activity to maintain it and to make sure that you are earning a profit from the activity. So even if you don't make a profit in your business, that's not necessarily going to count against you. Are you putting in the strategy and the time and the effort and the expertise and the investment of personal capital, which is another factor? Are you putting in that time and effort to make the business profitable? Or are you just coasting along and kind of not really giving it your best shot, or even 50% of your best shot? Another factor is if you depend on the income from the activity to maintain your livelihood. So for me, my bookkeeping firm, a virtual bookkeeping business, is my main source of income. I am married. Me and my spouse do file married joint filing on our tax return. And he does have a salary. So it's not my only source of income, because our income as a married couple kind of pools together and we both claim the total sum of our income. That is how married filing joint works. But if you are a business owner or you have a hobby, if that hobby is contributing to your main source of income, or as your main source of income, to your livelihood, that is a factor that can go towards saying something is a business rather than just a hobby that you're doing. The fourth factor is whether or not you enjoy what you're doing, or what element of relaxation or entertainment is imparted by the activity. So if you have the hobby, let's say you're an artist and you do paintings and you sell some of your paintings, or maybe you host painting classes, and so you do make a little bit of income from the paintings, but it's not your main source of income. And the reason you do the paintings isn't to make income to support your livelihood. The reason you do paintings is because you enjoy it, or it's relaxing or therapeutic for you. And so that is a factor that they would take into consideration. How much do you enjoy the work that you're doing? How much does it relax you? If that is the case, they might say, you know what, we think this is actually a hobby. The fifth reason, or the fifth factor that the IRS would look at, was whether or not you have other sources of income to invest into this activity. So let's take the painting example again. Maybe you do have a 9-to-5 full-time salaried day job, and then you do paintings and you sell some of them, or you host painting classes in the evenings or on the weekends, and you use the part of your salary, you budget part of your salary from your day job to purchase materials and supplies and canvases and classes and advertising costs for your painting income. If you are using another source of income and investing that into the activity, that is a factor that they consider that it might be a hobby. But the point is that you have enough income from other sources to fund this activity. You know, the activity might not generate enough revenue to fund itself, therefore, like all the expenses related to the activity. Therefore, you are having to pull income from other sources in order to keep doing the activity. That probably would make it a hobby rather than a business, because a business should get to the point where it is profitable, meaning that it has enough revenue to support not only its expenses, but have a little bit left over after that. The sixth factor is about things that are outside of your control, leading to a loss. So if you have a loss in your business, that means that you had a certain amount of revenue, but you had more expenses than that revenue amount for the year. So if you have a loss and it's because of factors that are outside of your control, that can be considered whenever we're determining, is this a hobby or is this a business? Another thing that this factor points out is that there are startup costs, and in the first couple of years of someone being in business, self-employed, they know that there is probably going to be a loss. Like, not every business is immediately profitable. I don't really know the hard statistics on that, but I would venture a guess that most, like more than half of startup businesses, are not profitable in their first year or so in business, because there is a lot of investing and capital that needs to be put into the business to get things going before it starts making revenue. So they do take into consideration things that are outside of your control, the normal way that businesses go in their first couple of years when they're in the startup phase. The eighth factor is whether or not there is a change to your methods of operation. And this kind of ties back to the earlier factor about what you're doing to make sure that the business is profitable, or do you intend for the business to be profitable? Because if you intend to make a profit and your business is currently experiencing a loss, if your intention is to make a profit, you're going to want to change things, right? You're going to want to apply new strategies. You're going to want to review and see what isn't working. Why am I at a loss? What is causing this to be the case, and how do I change it? Or should I try some new operations or strategy to change my position from being at a loss to finally making a profit? So are you doing the things that you need to do to change the outcome of your financials, from going from being at a loss and having way more expenses than income to a business that is profitable, that has more income and revenue coming in than expenses that it is spending money on? Another factor is whether or not you have the expertise. Do you have the experience or the expertise to do this big business activity and be successful with it? So if you have education, like I have a math and physics degree, I don't have an accounting degree, but I have a ton of experience with bookkeeping on the job. So just because I don't have education necessarily in finance and accounting, I have a ton of experience. So my virtual bookkeeping business is based on my years of experience and the training that I have done on small business bookkeeping. So I'm able to say that I have the expertise to be able to run this business and do bookkeeping as a business activity and be successful with it. If you are a business owner who was doing similar things in the past, but maybe you're doing a new business now, and the level of success that you had in those prior business activities, that can be used either as a factor for your business being a business and not a hobby, or against, meaning that they could say, well, you have never done this before, or you've done this before, but it's never been wildly profitable and successful. And they can say, well, that is the reason that we're using to determine, that this is a hobby and not business activity. So it depends on what you've done in the past and how successful you were with that activity. And finally, we're going to get to the point where I think people get this 3 and 5 year rule from, but it is about how often you make a profit and how much of a profit you make. There's no hard and fast rule, I think, with like numbers about like this many years or this percentage of profit that you're experiencing. I don't think that's the case. I mean, it might be like, this is information that I've taken from the IRS website, and they don't put an indicator of like numbers on there. They just say the activity makes a profit in some years, and how much of a profit does it make? They just look at those figures. And of course, they give us the fact that they use 9 factors, but then they have more than 9 factors listed on their website. So the last one is whether or not the business holds assets and whether it intends for those assets to appreciate in value. So assets are something that the business uses over a longer period of time. We have day-to-day office supplies that we use. You might have advertising campaigns that you do an ad spend over a month, but those dollars are used up in a short amount of time. Whereas if your business purchases assets like vehicles or buildings or land or computers and office equipment and major pieces of furniture, all of those things are used by the business over many years. That is not something that is consumed like office supplies would be within a short amount of time from when it was purchased. So things that are assets to the business hopefully appreciate in value. Sometimes things like cars depreciate, their value goes down, and you actually do get to claim depreciation on your tax return for those things. But in general, we can expect that assets, especially things like land, will appreciate in value. Their value is going to go up over time. So if you have a business that has assets and you are expecting those things to appreciate over time, that can be a factor taken into consideration when determining whether business activity should be claimed as a hobby. And something very important that I think we need to talk about is the fact that they are not taking one of these factors and then using that to determine. They're taking a look at the entirety of the situation. They are considering all of these factors. And I don't want to say that it's one factor carries more weight than the other. I think it is a very subjective thing that is considered, and we can argue about whether that should be the case. I believe that things to do with like finance and money, and especially policy and tax law, should be more objective than subjective, but I'm not a policymaker, unfortunately. The world would be a much better place if I were. I'm only allowed to make policies for my business because I'm in control of what happens right here. They don't consider one factor over the other. There is no one factor that is being considered in that decision. It is the totality of the circumstances. It is all of the factors being considered. That is how they do it. So I don't think a lot of people need to be, at least as far as the people that I've worked with over the last 10 or so years, they have qualified as small businesses. And even the folks that have like the side gig or the side hustle get to still claim their income and expenses as business activity. They claim a profit or a loss from that because of these factors. We're taking into account like all of the things that we talked about. And, that's not up to me or a tax preparer to decide for you. That is something that you can be advised about. But ultimately, the decision lies with the tax courts if you were to get audited and you challenged it and blah, blah, blah. I don't think anybody watching this video really needs to worry about it, but when in doubt, talk to a tax professional. Get them to look at your specific situation and to help advise you on what is the best course of action as far as filing these revenues and expenses from whatever activity it is that you're doing. Talk to somebody about your specific situation. This video, me talking about it here, is really for informational purposes and is for me to help guide you through what the information says because oftentimes the layperson has trouble reading tax codes or tax information, and it just swims like all the numbers and letters in front of their eyes, and they cannot comprehend what it's saying. But most of the people that I work with, freelancers, creatives, self-employed folks alike, they're not doing a hobby. They're making actual money, and they get to claim those expenses as tax deductions against their income. So let's talk about if you decide that you have a hobby and you want to transform it and transition to being a self-employed person, a small business owner, a sole proprietor. Let's talk about what that looks like. It is going to require more effort, time and effort on your part, because if you're not already, for your hobby, keeping good records, that has to change. Like, first things first, you need to keep good records. And even for the folks that are like, you know what, I'm okay with claiming this as a hobby. That's where I want to stay. I'm comfortable with that. I think that is warranted, but you still need to keep records. I think you should still be doing bookkeeping to make sure that your information that you are reporting on your tax return is correct and accurate as possible. I don't know why anybody would be satisfied with not double checking their work, especially when it comes to filing a tax return. Like, you want that puppy to be correct. So there are folks out there who are actually running businesses, but they are treating it as if it were a hobby. They are throwing spaghetti at the wall. They are not implementing strategy. They're not listening to advisors. They're not on the path of being an entrepreneur, being a business owner, and taking responsibility for what they have control over, which when you're a business owner is like pretty much everything. All the decisions and choices that you make about your business activity. That's what being a business owner is about. It is about saying, maybe this is an uncomfortable thing to do, or maybe I don't actually have the capital for this right now, but this is something I want to try, so I'm going to go find a way to fund it. Moving from doing a hobby, having a side gig or a side hustle, to running a business is happening up here. Like, there's not much external things that will change when there's not change happening with your mindset, with the way that you think about yourself. Are you a hobby person or are you an entrepreneur? Are you here innovating things, or are you just trying to make some extra cash? It's not necessarily a dichotomy, but there are, big girl thoughts, and then there are broke girl thoughts. You can be drinking your dumb bitch juice every day, or you can be, I like to say, rich auntie energy. Like, I want to be the rich auntie who is like traveling the world and bringing back gifts for my nieces and Showering them with love and affection because I'm not stressed out with, with kids of my own. It's not a dichotomy, but anytime you're faced with a decision about your business activity, like, ooh, what should I do with this or that thing? Or like, I want to increase my revenue, so how do I do that? I don't even know where to look or what to do or who to talk to. Those are all broke bitch thoughts. That's you drinking your dumb bitch juice. And we want to be thinking like an entrepreneur. We want to take control and feel empowered about what we're capable of and have that mindset to go after what we want in a respectful way, obviously, and not in an exploitative way. I'm not saying that at all. But making those decisions from a place of empowerment and strategy will take you a long way. It's not the easy road. I think the hobby thing is the easier road. Anyways, some of y'all are probably going to argue with me about that in the comments. It's fine. So the IRS has said that no one factor is more important than the other. It's the totality of the circumstances. But me personally, I think the bookkeeping and the record keeping is pretty fucking important. And I think that's the most important part. So that's why I'm going to talk about the Bookkeeping Foundation Kit, which is my digital course and my answer to folks who are using QuickBooks Online who have no experience with accounting or bookkeeping, have never taken a finance class in their life, especially business finance. Personal finance is different. And who are clueless and who get stressed out and frustrated when they open QuickBooks Online. The Bookkeeping Foundation Kit is my answer to those folks who need the guidance and the hand-holding from the very beginning to set up their books the right way, to learn how to do the bookkeeping on a regular, consistent basis, and to make sure that those numbers are accurate. Even if you have a hobby, you deserve to have accurate financial data about your hobby. If you're making money from it, you're spending money on supplies, you deserve to have accurate financial reports. You deserve to have data to look at to make decisions, even if you are staying as a hobby person and not moving into the self-employed bracket. So if you're going to run a business, you have to have records. There's no way around it. I'm so sorry. But that's why I'm here, is to help you. And when it comes to running your business, the more detailed we can get your bookkeeping, the better off you're going to be. And that is from a couple of different standpoints. First of all, profit. If you want to increase your profit, you want to run on a break-even model, you have to have good records in order to do what you want to do with your business. Create a profit, go break even. I don't recommend trying to operate at a loss. That's probably not going to work out great for you in the long term. If you want to grow your business by adding a workforce or purchasing equipment or doing continuing education so that you can up-level the services or the products that you're selling, you're going to need accurate financial reports to initiate growth, to have strategy for your business growth. I have worked with some folks that have ended up wanting to sell their business, or they operate their business over multiple years knowing that the end goal is to sell the business. They want to get the business to such a place, maybe a profitable place, to where they're like, and I'm going to sell this business to somebody else. I'm going to put a price tag on the business that I've built and created and sell it. And by gosh, you need bookkeeping. You need accurate records if you ever want to sell your business. The numbers are going to speak for themselves. And if that person that wants to buy your business needs to get financing, the bank is going to want to know that the business is in good standing, is profitable. They have criteria that they look at that. And of course, our least favorite thing to talk about, but things happen in the economy that are truly so far outside of our control, unpredictable, unexpected. I mean, the freaking COVID-19 pandemic, like all of that it killed a lot of small businesses. And I'm not saying that bookkeeping would have necessarily saved everybody, because that's not true. There were a lot of other factors that went into it. But the folks that I worked with, that I kept the books for, were able to apply for funding like PPP loans and the SBA loan at a very low interest rate. And they were able to stay operating and to stay open for a large part because we had great records to submit to the banks for the emergency funding. So I'm not saying that it's everything as far as being prepared, but bookkeeping goes a long way to making sure that you do your best to prepare for things that are going to happen, that are unexpected, yet we still expect them to happen. We still get prepared for them to happen. So pitfalls, recessions, global pandemics, all of that stuff. Bookkeeping is essential for that. If you haven't clued into it already, I want you to purchase the Bookkeeping Foundation Kit. And you can go to bookkeepingfoundationkit.com and purchase the kit for $77. It is a 3-part video series plus an amazing workbook that I wrote and a 30-day free trial inside my private virtual community where me and all my clients hang out. And this is the best way that I can offer support to you, that I can give you hands-on practical tools to get your bookkeeping done and correct. So just to recap, there are 9 factors the IRS looks at in totality to determine whether your business activity should be taxed as a hobby and therefore have a limitation on taking a loss on the expenses that it can claim, or as a business, which can claim a loss. And it is not just about whether or not you've had a profit for 3 out of the last 5 years. That is a very small slice of the pie, and I don't even think those numbers are accurate. So today I want you to go purchase the Bookkeeping Foundation Kit, no matter if you are running a hobby activity or you're a self-employed small business owner and entrepreneur. You got to have bookkeeping. I want you to have bookkeeping. I want you to have the numbers correct to be able to make those good choices for you, because even if you are running a hobby, that is probably still income that you might be relying on. And you deserve to have accurate data so that you can make good decisions about that hobby. And for the business owners, you need to have bookkeeping point blank, period. If you don't, definitely grab the Bookkeeping Foundation Kit. Come join us inside the community, and we'd love to welcome you and be a part of our little entrepreneurial world. We're all stressed and anxious almost all the time, but we do that together, and there's strength in numbers. Thank you so much for watching this video today. If this was helpful, please leave me a comment below letting me know your thoughts. Hit that like button, subscribe, share with another entrepreneurial friend or someone who has a hobby that is not sure how that hobby affects their taxes. I'd love for you to share this information with them so that I can help them out too. Thank you for watching. Get on my email list, get the Bookkeeping Foundation Kit, and I'll talk to you soon. Bye.